Good morning. All right. Countdown is underway to Friday, the end of the year. Everybody I talked to says, where did the year go? It's like just flew by with all the craziness that occurred. So yesterday did not do a consolidation day at resistance or different things that we looked at. Rather, it was a trend higher day. And what we looked at initially, the S&Ps, I said where they were gapping, were set up to potentially go higher because it was just a minor gap above the recent range. And as you know, the end of last week ended with a bout of selling that drove things lower in the last minutes of trading. So it was turned out to be like a gap above a breakdown failure. So technically, it had that set up to power prices higher, and they did. So now we got the looking at the Dow here. We've got two pivot highs. I'm just looking here. You can see it's right up against that one, which is somewhat aligned with the other one, but not quite at the high. It's like, can it keep pushing up? Can we get a Dow new high? I don't know, Mike. We'll see. It's not much of a gap. So, just here looking at the YM futures, it's not much of a gap. Whereas if it was gapping up here, I think there'd be a greater odds of that happening. The bigger the gap, after multiple days up, the greater the probability of a gap in crap. Now, it is rolling over, as you can see. It was going sideways there at that resistance, and now it's broken down. Versus yesterday, it was losing some momentum, but it hadn't broken. That's what we were looking at pre-market yesterday. That's last night. That's right. Here was the open. Now, I talked about the highs getting closer together, and then here, as we got closer to the open, you could see what happened. It whipped up, and it whipped down, and then it whipped right back up again. And I guess that's where the computers got done playing ping pong. And then that's where it started to trend. Now, starting off the day differently, and that a decent move down, and it's while there's a 200 here, it's like, okay, that's not a big deal. It's about, as I set these up, it's about the 20 on the equal to the 20 on the hourly. And we always look at moving average, look to the left. There's something in alignment with that. And there's a subjective reference point, having to go across what's directly to the left. So there's nothing much of here. I don't know that it'll get all the way down here, but if it does, it's still not going to damage the daily time frame at all. One of the things we discussed yesterday was that turn days tend to be erratic and difficult. Well, yesterday didn't turn out to be a turn day at all. It was a continuation of the initial move, even though it was at this near the area of this pivot high. And so on the hourly, we see momentum stalling, right? The distance between the highs, but it's still above major resistance. So even if it comes down here, the depth of retracement is going to be deep, right? Not supposed to come all the way back down to what we call major support. We'll see if it does, whether it makes a higher low, go higher. So just for educational purposes, when we see something come down like this, which is a power move on the 5-minute time frame, and this is still an uptrend where it should make a turn on the hourly time frame, the ideal scenario, what I look for is for this, because this is a power move down here against this, say this power uptrend, which momentum has slowed a bit. We don't want to just buy this if it makes an initial turn down here. I would like to see this maybe make a W and go sideways a little bit and get away from this nastiness here. And then what happens is, the hourly, how long this might take, begins to stabilize Now, one of the things that we all struggle with as traders is the time frames that we utilize to create what I call our pictures, right? Meaning the pictures that we look at in the time frames. And so from an intraday trading point of view, as this begins to stabilize, this may not make a turn on the hourly time frame, which is okay. Now, if you decide to look at a 30-minute or a 15-minute that you're looking at more detailed information, that may or may work to your advantage. It may not. I get you on this. Oh, cool. I mean, Joe's saying he understands what I'm saying. That's great. Yeah, right. So, I mean, that's what Dan and I do every day while we're giving our views, bias, gaps, whatever, pre-market. We're always throwing some education in there to add to, hey, how can we share with others what we do on a day-to-day basis? And one of them, this is a big subject about understanding how to put together multiple time frames. And how do I deal with a bearish event over here, with a bullish event over there, and not give myself brain damage as to, well, I'm not going to look at the 15-minute, the 10-minute, the 46-minute and the 21, whatever. And so what we want to see is this is giving us a bias. We know where this is in relation to prior support. Now we want to see on this 5-minute time frame, I'm assuming the 5-minute time frame is your primary trading time frame, we want to see some kind of bullish confirmation pattern, which would start with making a pivot. Right? What's a pivot? 3 higher low bars to the left and right. And now that could retest this. And now, which this might take a half hour or so. Who the hell knows? One day it's 3 hours, another day it's a half hour. But what we want to see is apply bar by bar analysis to what's going to happen here, and wait for a pattern that provides us a bias that, hey, this has repaired the damage of falling and so hard in this time frame, with a bias that this is bullish over here. And again, putting that in alignment with this, it's like, yeah, maybe this could keep going. I don't know. But, as any trend gets closer to an ultimate point, and it did so over the course of a few days to go straight up, it's going to become more difficult, right? That's the theory, to continue to move straight up. And whether this is the start of, a consolidation day of a turn for a pullback or not, we don't know yet. So on the other hand of thinking, hey, this could repair the damage and go straight up, this might just keep meandering around here today. And chopping around where, yeah, and then maybe it does get some kind of a pullback tomorrow. So, and again, these pre-market discussions that we have, for those of you that are here every day or maybe take a note of what we're talking about, the discussion will progress tomorrow once, we see what kind of trading day has evolved. So, as I said, yesterday was looking for some type of a consolidation day, since it was at this resistance. And so going to the S&Ps, it was right there at these highs. And so the S&Ps just pushed higher. And one of our discussions last week, and with options expiration, all that, was the discussion that, hey, you know what, this big level at 4,700, right, that it's been bouncing back and forth at, hey, it got above that on Friday, but it didn't really create any kind of a move. And this is, in, retrospective yesterday, it's like, well, it stayed above 4,700. We got that whipsaw that occurred first thing in the morning. And then those big open interests at 4,700 I think that what happens is it just starts to unwind. And what you typically see is a consolidation to stayed above it last week. And this is typically what happens, is it just gets flat there as it winds the spring prior to making a move. And so now, this is at 4,800, and that's a big level. So it does make sense based on that information that it'll need to do some chopping around. Now, straight up, wide range bar, new all-time highs. This would make total sense for this to be a consolidation day, of this very large gain over a few days. Right. So after November here, November 8th, this is where we talked about where Bitcoin topped out and began to correct a bit. And Santa Claus bringing cold to everybody. Well, in the last minute, he woke up out of his slumber there and, came after the fact. Where would you put minor support on this chart? The prior highs is minor support. Now, this is, why do we say that minor support is subjective? Well, because, let's just throw this down here and drag this up here. And so, okay, now that's minor support. What was resistance becomes the high, which is yesterday's low. So from a perspective of bar by bar analysis, the prior bar's low is support. That's right there. That's your support. And you see it's right in the area of the prior day's open and this close and that open overlapping. So we do have this support right here. This is minor support, but you're going beyond what's directly to the left, which is this. And in essence, and you can see where my cross hair is moving on the 5-minute and the 15-minute chart. You can see this overlapping bars are a base. That is your support, not this. Right? That's why this is subjective. And part of the MTS course is in explaining support and resistance is to educate everyone as to the subjectivity of a concept that we even explain because so many use it. But in reality, this is what intraday traders are using. Swing traders would look at this and say, well, here's what was resistance becomes support. That's your technical analysis 101 that everyone's heard. Well, yes, they're going to look at that with a thought that that's where buyers should show up, right? What was resistance should become support. However, what is really happening is intraday traders are using this and they're buying there, which begins to create a turn. Now, because of this setup here, right, straight move up, wide range bar, those of you that have taken one of our classes, think about, should this come down here? Right? While it's a wide range bar suggesting the end of a move and it's at, no, it should not come down here. This is a bullish move, right? So what we want to see happen here is this create new support where this demand, which is so strong, which ripped this through, this congestion here, we want to see that demand, however it comes in, just prices jerking around slowly, things whipping back and forth. If it dips down here, we want to see it spring back up again and form tails. Yeah, we want to see it stay in the upper third. Right? We can go a half, but an upper third would be the ideal. And as this goes sideways here, under this whole number, right, which we know that big open interest in SPX there, it's going, it's like here you got this, I don't know how the proper word, this technical concept is banging on the head of just creating an area of resistance here, whether it's the whole number, whether it's the open interest in the options, whether it's the fact that it just moved too far too fast. All of those pieces of information that support us thinking, hey, it shouldn't break below this low here and definitely not close below it, consolidating up there. Yes, this has been traded through. It's been neutralized. So those of you that have taken, swing course, MTS course, right? We go through that. This area being traded below and back above neutralizes it. It's my way of educating as to how to discount what's to the left. But now this has to begin to create new support, right? And one of the ideas, how we look at things is that, this is a power move. Power move suggests continuation. And you've heard me use the term, well, yes, but it's the weakest link. Well, why is it the weakest link? Because there's no support underneath it. It was a power move. It was just like buying frenzy. So now there's little to no reference point to buy at. So buyers have to come in, demand, and they have to create this new support. Well, how the hell do they do that? Well, intraday traders are trading, hedge funds, mutual funds are just saying, hey, you know what? Buy it on a 25% pullback. Well, why 25%? That works most of the time. Just get in there. If it goes down, we'll buy more. Right. And through these different, methods of trading and who's doing what, why they're doing it, which we can never know. Right. They are going to create some kind of trading pattern up in here. Right. Whether it's a bottoming tail bar or it's a red bar ignored, all the things that we look at, it's going to create some kind of a pattern that tells us that buyers are still in control and they believe things are going to go higher. So now, and we come back to need some kind of resting period, right? Unless it's going to just blast off into the end of the year and it's going to make a bigger void, which is going to create a bigger correction, right? Stopping here would be good. If the end of today, we get something that looks like that, well, we all know the message there too. So we know the bullish pattern that should be created here over the next few days. And we certainly know what shouldn't happen to the bullish pattern today in the next few days. So with that being said, right, we just trade today accordingly with a bias. Now, the weekly chart, you asked me about the weekly chart. I said a couple of weeks ago, I talked about the fact that this was a very bullish move and that I don't know what's going to happen here, right? It's going to start pulling back. Will it stop here? Will it go down here because of this crazy market? Because this created that type of power move, same as this, right? Same kind of a power move, just a different time frame. And it resulted in a choppy sideways consolidation. Right? Yesterday I called it a Christmas tree pattern or Christmas pattern, red, green, red, green, red, green. And as crazy as it seemed, one of my comments last week was, well, if this is going to correct in the trading range, that's what we're going to get. And we got this wild whippy, whips back and forth. And so now we've got a breakout so far this week out of this whippy range. Now, what does it need to do? Well, go sideways. Maybe this week does keep going up. And so, look, we just see how it unfolds today. If this, most of the time, well, not most of the time, all of the time, where we get reliable breakouts out of consolidations like that, it doesn't happen from going from the top of the range to the bottom of the range to a breakout above the top of the range, right? No, what it does is at the top of the range, it rests. That's the reliable one. It rests, or it forms a bottoming tail bar. And then from there, after some rest, it then continues. In other words, it tightens up. From wide and whippy, it tightens up and then goes, which is what I was kind of hoping it would do here, this week, and then go. Rather, buyers just fell all over themselves and pushed it up. So if this continues today and gets through 4,800, which if it does get through that with the open interest there, it certainly could drive it higher. And it's just going to make the move to the downside potentially a lot bigger. So the trend is up. It's extended on the hourly. This has cleared the highs here. And we could just get this consolidation, but hey, just follow, the smaller time frames. And when you do that, and we go down, whether we're looking at spiders, so far we see we're starting the day with a failure to continue to push higher. So now will it recover? Does it stay here? Which would eventually lead to a bearish pattern, where it comes up into this resistance and then rolls back over. And so that's why they call this the hard right edge. Is this going to stop here and roll back over, where this extended hourly of breaks here and we get some kind of pullback, which is still going to be in an uptrend, right? But because of the way it went up, the significant support is way down here, right? And that's why, on a day-to-day basis, it's yesterday's low. So we'll see how it unfolds. We try to put the pieces of the puzzles together, which is multiple time frames. And there's your S&Ps, which now it's based on this time frame. This is rolled over. The 15 minutes rolled over. Does it rip right back up? 100% retracement back up, or sideways down here, showing weakness? And the next reference point isn't far away, so it's going to be some chop, right? As you have reference points that are relatively tight together, it produces a thought, our expectation that things unless they can cut through here, it's going to be like a ping pong ball, and our heads are going to be the ping pong balls, or our money that's going to get flipped back and forth here until this begins to roll over, right? The hourly rolls over. This rolls over, it's going to be below the 200. And that's when things can trend and you have a void to come lower. We ain't there yet. All right. I'm taking too long, but you guys get the gist of it. Let me turn it over to Dan. Bitcoin is flip-flopping here. Oil. All right. That moved up. Talked about that yesterday. And, silver was higher, popped back down. So that's what the transports do there yesterday. All right. So strength everywhere. And things have moved up and, up to their respective resistance. All yours, Dan.
Good morning. Yeah, we've been watching those SPY all last week, and yesterday, and they, as Greg said, right into the close, they just fell all over themselves with the closing at the high, up 5 bars, all-time highs. Give me more. And so unless you're just day trading this very bullish 15-minute chart, we've just been using the strength of the broader markets for for the fuel in the tank. So we have a ton of open positions in both letters. Everything is a bullish position except for JP Morgan. We got a bear call for Friday. We sold a call spread yesterday. That's gapping down with Bitcoin. And we also did an Amazon way 3,600 call spread for Friday. If this actually, here is a good example, folks, of legging into a condor. If this were to negate yesterday's ugly top and tail red bar, then we'll sell it out of the money 3,300 or maybe lower put spread. And then we got ourselves a condo, not a condo, a condor. So with Bitcoin down, HUT we entered yesterday, bottoming pattern. That's the only one a little bit against us. Everything else is totally fine. Glancing at all the opens here, we're fine. There's not many earnings stocks, but let me just go through my interest list here. Ford, we have out of the money puts, but let's keep an eye on this as a directional. It's a beautiful trading range. Mike Papa, I just gave a naked $40 put. Nice little breakout of a trading range. Caesar's Palace. This is a W bottom, very bullish retest, wide range deep into resistance. And I got 3 bullish bars in the upper 80%. So this looks fantastic. Let's keep an eye on it. I'm not posting a trade yet, but I got it in a thumbnail. Really, that looks like a Reddit boy toy. And now it's up huge, nothing to do with that. DUOL. How I found this one, Evergreen or Everlast, Ever something or other, brokerage firm came out and gave their top picks for next year. Let's go through them all. This was one of them. Now look how it's a Climo on the weekly. Climo, climactic buy setup to all-time lows. And it's stabilized and above the 20. So that's a put spread or naked put. And the premiums are jacked. The 85s for January closed at $110 bid. Folks, that's that's $25 away. That's massive premium. Bumble was on their list. We actually already have this as a pending trade over last week's high. Amazon they have on their list. Nothing, no pattern there. Facebook. Remember yesterday morning, I was all over this. I'm like, that's a nice gap, nice turn. Look at all these converging MAs after a greater than 100% retracement. I was looking at that just for a put spread, but because the markets are extended, but that worked out well. Greg's dog Chewy is on there. No great pattern. Wix is on there. No pattern. It was a nice bottom though. It's kind of a new low, bullish divergence, new low plus. So that was your entry on this WRB. I got two dogs on here. Greg's dog Spot and Chewy. Spot looks fine. It's a bottoming pattern, and it's just whipping around, but it's definitely worth. Wow, this low. AYI up alarm. We're in that. So Spot, I'm going to set an alarm, just eyeball it up here. 239. AYI alarm. This is a beautiful trade we got into yesterday. It was in the weekend letter. I tighten the stop. I'm going to set a new alarm here at 212. It should not retrace that far. Our AMD looks good. But I'd be tightening stops today. I'm going to set an alarm at, let's say 216.50. And that's how I manage opens with alarms and in minders where I can see how much they're up or down, and I can tell. Tim was asking about CLR, possible long. It's not bad. I personally don't like the way it trades with all the overlapping bars, but if it closes like this, Tim, then it's a nice continuation pattern with a 1, 2, 3. So I would like it better if it closes right here. So we got well, diamonds are actually at the high. The other three horsemen are selling off a little bit. Qs with a wide range bar filling the gap right here. I mean, folks, it's gonna, people ask, hey, when somebody asked me yesterday, is this a climactic sell setup? And I said, no, it's not. It's a controlled, amazingly bullish move. It's not a Climo where you just see the greed. It gets far from the 20. But a retracement is like, look at Nicola bottom right here. We're in this one. With shorted puts. Oh, we're long stock also. Detected, that's the general rule, but if I like the pattern enough, no, they're good to go. So MP is good to go. Let me check. Yeah, duo, let's wait 5-minute high on duo. Yes. All right, so yeah, good question there. But our general